How do you feel about your mutual fund investing in Silicon Valley startups? You may not know it, but according to a report in today's Wall Street Journal, your fund could have some shares of newbies like Airbnb or Dropbox if your money is managed by BlackRock, Fidelity, Janus, or T. Rowe Price. Joining us now to talk about the risks and the rewards, Stacey Francis. She's a financial planner with her own firm, Francis Financial. So, Stacey, first of all, how common is this with mutual fund families, and should investors be worried?
Well, you know, it's becoming more common. In fact, last year we saw 16 deals closed by those big four that you mentioned. This year, to date, we're already at 13. So it's looking like it's going to be a banner year. Should you be concerned? Yes, you should be concerned. You know, the average person investing in a mutual fund has it in their retirement. They are investing in a mutual fund because they want long-term growth and income, not necessarily jet rocket propelled growth with a whole lot of risk with it.
But just to take the other side of the argument here, my assumption is, from what I've heard about these positions, is that they are really relatively small in any individual fund. And obviously, if they pay off as a Facebook or a Twitter did, and I believe some of those funds were actually investors early stage in there, they can do very well.
Well, Teller, you bring up a very good point. Typically, you cannot go over 15% in something liquid like this, according to the SEC. So we're looking at most a 15% stake. But the only thing that I would say to be very careful of, a lot of these investments are in high-tech startups. And it reminds me back of those years, if we all remember, many decades ago, in the 1990s. In fact, it's interesting, Janus and Fidelity were two of the worst offenders and had some of the mutual funds that lost the most. So it's not necessarily bad to invest in this part of the market. Our biggest concern is that most investors don't understand that this is what's being put in their mutual fund.
So if one of your clients came to you and said, look, I'm worried about this, what would you tell them to do? I mean, how can you find out if your mutual fund is making these kinds of investments?
Well, those investors that have financial advisors that work for them, that essentially are helping them, you have an easy way out, because that is the responsibility of that financial advisor. However, if you're on your own, there's a couple things you need to do. Number one, go to Morningstar.com. You can see all the listings of all the current holdings of that mutual fund. That is public information. That is for you to know. Also, when you get your annual report and you get the proxies, I know it's a big, thick document. It's very easy to just put it in recycling. Go through and look for words like venture capital, IPO, pre-IPO investments. Those are your three target words to look at and be concerned about.
Can't you just call the fund and ask them whether they have any early stage or venture capital investments?
Yes, definitely call the fund as well. Actually, to be honest, a lot of the mutual fund companies out there are getting high marks for consumer education. So give them a call. But I will tell you that this is not something that they're really publicizing and trying to put out there on the front pages either. As we saw, you know, some of the stocks actually have been gotten some hits, and that's because this is not necessarily good news.
Stacey, real quickly, we just have half a minute, but you know, for years, a lot of individual investors were saying, how can I play venture capital? How can I get in IPOs, even if they could just buy a few shares? Now, isn't this a balanced way, a safe way of getting into those, new offerings?
Yes, there are actually mutual funds that you can buy that focus specifically on this part of the market. That's where I would go to get that exposure, better than buying, a few shares of Facebook through your discount brokerage. It's better to get a larger exposure. But again, know what you're buying, and there are some great technology fund-oriented stocks out there that focus on stocks. But again, know what you're buying. This is not typically what you want in your long-term investing.
Lots of good advice. Thank you so much, Stacey. Stacey Francis of Francis Financial.